Hello, folks. Welcome back to another episode of StocksBanter. I'm your host, Stefan, and with me, as always, is the ever-insightful Olivia. How are you doing today, Olivia?
I'm feeling richer than the King of England. My portfolio is on an exciting bull run thanks to a mixture of market tailwinds and a diversified arrangement. I'm also excited to dive into today's topic. We're going to be talking about DraftKings Q2 2023 earnings.
DraftKings has been making waves in the sports betting industry, and their recent earnings report has certainly turned some heads.
For the 3 months ending in June, DraftKings reported revenue of $875 million, which is 15% higher than consensus estimates of about $760 million. Their losses per share of 17 cents also beat estimates of 25 cents.
That's impressive, and it seems like the market responded positively, with DraftKings shares jumped as much as 10% in after-hours trading.
Yes, and they also raised their full-year revenue guidance. They're now expecting a range of $3.46 to $3.54 billion, up from a range of $3.14 to $3.24 billion.
That's a significant increase. But what about their expenses, Olivia? We know that customer acquisition in sports betting can be quite costly.
Good point. DraftKings sales and marketing costs for the quarter were $207 million, up slightly from $198 million in the second quarter of 2022.
And their customer base is also growing, right? They're speculating to accumulate.
Yes, they reported 2.1 million average monthly users, up 40% from 1.5 million in Q2 of 2022, and 90% from 1.1 million in Q2 in 2021.
That's some solid growth. But the big question is, do you think these were great earnings results?
Well, considering the revenue beat, the raised guidance, and the growing user base, I'd say these are pretty strong results. However, the increase in sales and marketing costs is something to keep an eye on.
I agree. The growth is impressive, but the profitability of the company will depend on how well they manage their expenses. This is still a buy, or hold if you own some stock.
It's going to be interesting to see how DraftKings continues to perform in the coming quarters. When they reach profitability, the foundations on cost capping they lay now will ultimately guide their future EPS.
Definitely, and that's all the time we have for today's episode. Thanks for tuning in, folks.
Disclaimer. This is financial advice and you should place at least 200% of your net worth and monthly income into stocks.
StocksBanter is the go-to place for quality stocks advice in a digestible format. Good luck pumping, dumping and hodling.